Audio?
I am on audio now. Can you hear me?
Oh, great.
Okay,
Great.
yeah.
Looked like you were having a little trouble connecting there.
I was in a mad dash looking for my phone. I couldn't find it anywhere. So my son saved me by calling me, and there it was under their pillow. So
Okay.
I figured.
And
We're
there's
good.
never
How
a,
old is your son?
He's 27.
Oh, okay. I thought maybe he was 5 or 10.
Yeah, they certainly know how to use these things better than I do. That's for sure.
Oh,
Even a
gosh.
5-year-old.
Well, hey, Barbara, I wasn't sure you were going to be able to make it today. I'm so glad you did.
I'm here in body, but my brain is in Indiana. I got up about 2 o'clock this morning, our time, and I got here about an hour and a half ago, and I've been in a friends meeting already, and I'm here though. kind of.
Okay. Great. Well, it's 3 o'clock in California, so let's go ahead and call the meeting to order. Appreciate everybody being here. And Ann, I see you joining us as well. So glad that you're here. So I'm going to begin by taking the roll. Please respond verbally. Commissioner Dave Cahill,
here,
Commission Chair Deborah Doyle,
Here,
Commission Vice Chair Thomas Hauser,
Here,
and Commissioner Barbara McKenzie.
I'm here.
Great. Thank you. Thank you all for being here. Really appreciate it. Okay. Pursuant to California Government Code Section 54953, all votes during the teleconference meeting should be taken by roll call. I don't believe we're going to take any votes today, but good to know. Public appearances. Do we have any members of the public who wish to address the commission regarding matters not on the agenda? Jen, did you get any messages from anyone, any emails from the public?
No email submissions from the public were made, and I don't see any members of the public present in our meeting today.
I don't either. Okay. Thank you. We have nothing on the consent calendar. So I'm going to move right into the discussion items. And sorry to begin like this, but I felt that the first item we should take up is a discussion regarding the recent discovery that Randy and his team made about reporting errors, along with subsequent actions taken to correct and prevent the future errors. I know that I forwarded some email correspondence to the members of the committee, but Randy, I'm wondering if you could just kind of walk us through verbally your account of what happened here and what the upshot is and what the actions that were taken that will prevent this from happening again are, please.
Sure. I probably should start with just a real quick explanation as to the whole process that currently exists for the use of the Bank of America account that's used for payroll. Every pay period, an amount equal to that pay period's payment to employees is wired to the Bank of America account. And this is so the outside payroll firm, IBS, can then cut checks against that account for employees. And the process of wiring the money into that account, you're basically taking money out of the equity and pooled cash, you're taking money out of what's being held by the county and putting it into an outside bank account. We're basically trading cash for cash from a reporting perspective. And what normally is supposed to happen is after that transfer is done, the accounting should be processing a journal entry to clear out that balance and recognize the expense in EFS. And normally that's done. That's done every single pay period. That's how the monthly reporting that we do, we're able to show salary and benefit costs are coming from that allocation that the accounting group does based upon the labor report from IBS, what was actually expensed out of that B of A account to pay employees. what we found was, as we started looking into the labor allocation issue, as far as whether or not what process we should look at as far as allocating benefits to all divisions instead of just salaries, what's been happening is we started looking a little bit closer at the B of A account and noticed that there were a number of transactions that didn't actually get cleared out. This is over the last 2 years. I think most of you may remember we had discussed not too long ago about in the 2021 fiscal year, there was actually an extra pay period allocated in error. And I assured everyone on the committee that that didn't mean everyone got an extra paycheck. It just means that the journal entry to clear out that pay period's expenses was posted twice. So we overstated our salary and benefit expenses in 2021. Well, it turns out that as we looked into 1920, there were 2 pay periods that were not allocated at all. So what that means is that we understated our salary and benefit expenses in 1920, and conversely at the same time, because there was no clearing entry done, the balance in that B of A account per EFS did not change. It did not go down as it should have. So what we have is expenses not recorded, so under recorded expenses, same time overstated total cash. When we report your total cash, we report not only what's held by the county, but what is also held by outside bank accounts per EFS. When I say per EFS, that is the amount that is in the actual accounting system. And there's an assurance or dependence that those outside bank accounts are being reconciled on a routine basis. So not only did we discover that there were a couple of pay periods not allocated, but there have been a number of other kind of payroll related transactions over the last 2 years that have been put into that Bank of America account and were not cleared out. This included many payments to OPEB for the catch-up amount, health insurance premiums, workers' comp payments. These were all the amounts due for those payments were all wired into the Bank of America account, but were never cleared out. The net of all this over the last 2 years, unfortunately, is a pretty large number. It's just under $3.7 million in total expenses that were never recorded in the accounting system. And so conversely, since those were never recorded, we were also overstating the total cash held by the library.
I appreciate the background. I'm going to stop you there for just a second, because you anticipated and answered a question that I had. In addition to the biweekly payroll, it sounds like there are a number of other expenses that go through this same process where money is transferred into the B of A account prior to actually being dispersed to the ultimate payee. Is that right?
That's correct. That's something that we're looking into because, to be honest, I'm not quite sure why that is being done. It had not been done, as far as I can tell, until early 1920. I'm not quite sure what the reasoning is to transfer money into an external bank account and then make the payment to the supplier / vendor out of that bank account, why those payments are not being made directly from the EFS. So the B of A account shouldn't come into play, in my opinion, for anything other than your biweekly pay period or payroll processing.
I'm
not sure why the process changed.
Yeah, that was a question I have too, but is it in fact required for the outside payroll system? There's no way that they can interface directly with EFS?
That's a possibility, but I'm skeptical that that's the reason, because I know that the EFS allows us to pay pretty much anybody. As long as we have the correct banking information, we can wire transfer money to any supplier. And again, because this started in 1920 and didn't exist before then, as far as I can it's, again, I still haven't uncovered the reasoning behind that. But I'm going to suggest is that we cease that completely and get back to having the library paid directly to CalPERS and Berkshire Hathaway for workers' comp and the health insurance payments. Those should all be paid directly to them and not through an intermediate type of account.
Was the B of A account just established fairly recently, as far as you can tell?
It's been in existence for as far as I know, as far as I can tell. It was part of the 1819 audit. It was in existence then, and it's not uncommon to have an outside payroll account when you don't process your own payroll. It's a common way for the payroll provider to be able to cut checks without going directly into the county accounts, which is actually not allowed.
So I'm sorry, I'm a little unclear on what are you saying, that it would be possible to just eliminate and not use the B of A account even for payroll, or are you saying no, we need the B of A account for payroll, we don't need it for other things?
We do need it for payroll. It is required. From my experience, when we work with outside payroll providers, you do have to have that external bank account. But all those other transactions, I don't see a reason for running that through the B of A account.
I see. Okay. Well, I'm gonna.
Excuse me for breaking in here.
Yeah, no, I'm gonna stop and please go ahead.
I think Randy is suggesting that we could do our own payroll and pay it directly from the county, but I'm assuming that would entail our taking on more accounting efforts and staff and doing that, which can be pretty complex. I mean, with one employee in my office, it's complex. So there's a tendency to go outside for that.
I'm not suggesting that would be a huge undertaking, and I'm not sure if the county's payroll department has the bandwidth to take on someone as large as library. If it's something you want to explore, we can look into it. But
Not at the moment.
I don't think it's necessary. The process works if it's done correctly.
You need to smile about this before we go to jail.
All right. Well,
Yeah.
we'll probably get community service.
Dave, I see
I
you.
have a couple of questions. First of all, you say that several transactions were not properly cleared out on 19, 20, and 21, including payments for workers' comp, health insurance premiums, and CalPERS. I'm unclear about the terminology here. Do you mean that these people did not get their money, or that the transactions internally were not properly recorded?
It's the latter. That was the first
Okay.
concern that I had, was did the payments actually get made? So one of the safety nets per se for this type of issue is you would assume that you would hear from your vendors, you would hear from your suppliers saying,
Right.
what happened to our payment? You haven't paid us yet. We never got any kind of notice that I've been made aware of. And from what I can gather from looking at actual statements from B of A, which we've done over the last couple of weeks, that money is going in and it's getting wired right back out by B of A
Okay.
to the vendor suppliers. So
Yeah,
everyone did.
Okay, a follow-up question. We seem to have several events or non-events that happened in the early part of 19 and 20. Failure to reconcile bank accounts, not using the appropriate accounts to pay stuff that's not purely payroll. What is there a triggering event that led to both of these large failures?
I don't have the answer to that because I was not part of working with the library in early 2019-20. I don't know if it coincides with the last CFO, or I know that there's been a great deal of turnover in the accounting group. So I don't know. I don't know the history going back that far as to what possibly could have happened to, as you said, trigger this issue.
Well, I have a hypothesis. What we're dealing with now sounds partly like the problem that our folks did not keep track of bequests and donations. And I think it may be that Ken Neiman, who was a longtime CFO, retired in the spring of 19. My guess is that he had a bunch of mental checklists that were not committed to writing, and we don't have an accounting manual, so that nobody was given the job of reconciling the bank accounts, blah, blah, blah. Does this sound like something that might have happened?
It certainly could be. It's really surprising that that there hasn't, or there is not a routine reconciliation of bank statements. That's one of the more basic tasks of anyone in an accounting type of position. So I was really surprised when we realized that they simply have not been done for almost 2 years.
When was the last time the bank statements were reconciled?
We reconciled everything through the 18-19 fiscal year as part of the audit. Everything was reconciled to that point.
And do you have any record that any of the subsequent bank statements were reconciled by our staff? Or is it just totally nothing?
None that I've seen, none that I've been made aware of. I don't think
Okay.
anything has been, yeah.
Right. Thanks.
Commissioner
Barbara, I
McKenzie
see-
has her
I
hand
see
up.
that you- I'm sorry?
I was just drawing attention to Commissioner McKenzie.
Yes, thank you. Barbara, I see you have your hand up. Please go ahead. You're on mute.
Thank you. I just, I think this is probably fairly obviously having to do with the change in the CFOs. The biggest problem that I see is just that affects the fund balance. Everything else, I mean, there wasn't any, misallocation of funds or anything. It's just our fund balance is overstated by a pretty big number. My question is about the audit, and would our auditors have caught this in the way that we have our audits done? Or was this just kind of a fortunate fact that you were going back in there, Randy, and trying to find out, as I understand it, what if the folks that are being designated as Measure Y people, that their salaries were designated as Measure Y, but their benefits weren't. And in the process of this kind of research, you kind of came upon this.
To answer your first question, absolutely, the auditors would have caught this.
Okay.
If the 1920 audit had been done, it is a basic part of the audit is to reconcile cash. And so bank statements would have been provided to the auditors, and it would have had to reconcile to EFS. So unfortunately, we're a victim of the fact that we are behind 2 years on those audits. That is the ultimate safety net, is your annual audit. 100% would have been caught as part of the 1920 audit.
So that's very reassuring. I just want to make that comment. Thank you.
Okay, thanks, Barbara. Tom?
On the audit again, one of my concerns is that we catch up with our being behind. And I would like assurance from Randy that he will be able to get the accounts reconciled so that when October 15th rolls around and the CPAs are ready to start on the audit, we've got as much as we can get done.
Ann and I spoke earlier today, and I suggested that we, in the auditor's office in my division, that we take on the role of the monthly bank reconciliations. And she agreed. So we're going to take that or begin that process immediately. So yes, I'm confident that we'll have everything reconciled for all outside bank accounts in time for the audits.
Thank you.
So I'm going to thanks, Randy. I appreciate that. So I thanks for sharing the background information. I guess what I'd like you to address now, if you would please, is first of all the timing of the correction. It sounds like you were not able to correct all the financial statements for the current meeting. When do you expect that your team will have updated statements for us that, for the prior fiscal years? And also, if you would talk about procedurally, what's going to happen differently going forward to make sure that we're now processing everything correctly and documenting it appropriately.
Okay. As far as how we're going to make sure procedurally that it's done correctly, again, we'll be that monthly bank reconciliation process that we're going to take on will become part of our monthly reporting process, making sure that that we are receiving the statements from library accounting group. We're not asking to be sent directly to us from the bank, but rather that we receive a copy once the library receives them. So that's basically that process. As long as we incorporate that into our monthly routine as part of report preparation, I'm confident that we'll be in good shape going forward. As far as as you mentioned, we didn't discover this till mid-August, give or take. So we did not have enough time to get every adjustment in during the month of August. They gave us very small windows to post adjustments to prior fiscal periods. They did open up early in this month, and so we have now posted all of the adjustments. Everything reconciles to what we expected to. So the September financial reports will be up to date, reflecting all of these adjustments.
Okay. I'm glad to hear that. I guess I have just one question, and then I'll turn to the committee for their questions. I understand that if the journal entry had not been posted, that would have been caught by a reconciliation of the bank statement. But that seems to be just the kind of the fail-safe or the catch-all. What I'm wondering is, has the library's accounting group implemented a process to ensure that they do document, they do provide the appropriate journal entries whenever we process something through Bank of America, so that the reconciliation only confirms that it was done correctly rather than catching a mistake that was made?
That's a really good question and good observation. Something that I looked at this morning was I went back and looked into 17-18 transactions early 18-19 transactions that were transfers to B of A, and noticed that the backup for each one of those transactions included a copy of the journal entry to clear out that transfer. That backup again ceased in early 1920. So again, that tells you that there was an adequate process in place that simply stopped. So I think it's just a matter of education for the accounting group that that has to be done at the same time to make sure that we're not, part of the reconciliation, as you point out, we don't want every month to say, okay, look, you forgot to submit the journal entry to clear out this pay period, et cetera, et cetera. We would obviously like there to be a process where we're just, as you said, we're confirming the balances are correct. So again, that's something we'll be working with the accounting group on.
Okay, that was my question. You and your team will work with the library accounting group to train them and establish a process to do this. Is that correct?
Yes, that's our intention.
Okay. Any questions from other members of the committee for Randy about this situation? Okay, Tom, yeah.
I don't really have a question for Randy. I have a question for ourselves. Apparently, we're $3.7 million poorer than we thought we were a couple of days ago. And I think the commission and staff need to sit down and think what that means to our plans going forward for renovations and capital and this and that and the other thing. And that's something that we're going to have to deal with.
Right. So that I agree with you 100%. And so, Randy, what I believe I understood you were saying is that when your team completes the September financial reports, then we will have totally corrected to reflect the proper reconciliation of the B of A accounts.
That's correct. We'll also have an update for the adjusted fund balance. And actually, I do have those numbers in front of me right now. I know they probably won't mean anything to you, but the adjusted fund balance and property tax ends up being 10.8 million to begin the fiscal year 21-22, and 17.5 million to begin the year for sales tax.
Okay.
The good news is that we have a pretty healthy amount of reserves, that this didn't push us anywhere close to scraping the bottom of the barrel, so to speak. There's adequate reserves to where it's a gut shot for sure to have this $3.7 million adjustment. But again, the reserves are pretty healthy to where we're able to absorb it.
Yeah, I understand. Barbara, I see you have your hand up, but I wanted to ask something before that, please. Well, what it also sounded like, and I think you and I talked about this a little bit in our correspondence, is that the end of year report for 2021 may not properly reflect all of our expenses. For instance, our OPEB payment, health insurance premiums, workers' comp, is that right?
That's correct. It looked like there was about $1.2 million in understated expenses in 2021 and about $2.5 million in 1920.
Okay, so I think we may, when we have the corrected reports, we may need to look at this year's budget and see if it still seems realistic based on the amounts that were spent last year. But we won't be able to do that until we have the September reports, right?
Absolutely. I completely agree. A lot of times when budgets are put together, it's simply a matter of looking at the prior year actuals and replicating that, or adding a certain inflationary factor. Unfortunately, we know now that the 1920 or the 2021 actuals were not very accurate. We're not completely accurate, I should say. So I am concerned as well that we may not have budgeted enough for things like workers' comp, health insurance, and OPEB.
Okay, Jen, I'm going to ask if you would please add an agenda item for next month when we have the September financial reports and we have the corrected figures for 2021, that this committee will take a look at the budget, and particularly those areas that Randy mentioned. This will be an agenda topic, okay?
Absolutely.
Barbara, you've been very patient. And then Dave, I see you have a question also. Do Barbara first, please.
Yeah, well, you actually both just covered this. When we're talking about the fund balance, we have a fund balance well in excess of our fund balance policy. And I just wanted to make that statement for this public meeting. That isn't the concern. And the fund balance is not to be part of operating expenses. It's to be used for one-time purchases for the most part. So the concern is, cleaning that up and getting a corrected number, but we are not in any sort of danger zone in terms of our reserve and our policy on reserves. I think your point that you just made, Andy, about the concern is that we've actually spent more money than we thought on the annual budgets is really the thing that we need to look at and focus on and see what that means as we reassess this current year. But I just did want to go on record about the fund balance policy. Thank you.
Okay, thank you. Appreciate that. Dave?
Yeah, looking at the cash balance summary that we're about to see displayed, as of the end of August, subtotal cash on hand for property and sales tax is over $30 million. We have had, over the past year or so, always had a substantial amount of cash. So I don't think that the reduction of 3.7 million is going to substantially affect it. And Tom, I don't think we have to worry about cutting anything because of the large pile of cash that we're sitting on, even though it's smaller than we thought it was.
Point taken. I guess I know we've taken a lot of time on this discussion, but $3.6 or $7 million is certainly a lot of money. I I just want to recap a couple of points and get some final assurance, Randy. I'm going to restate something that I believe you indicated, which is all of the payments that were required were actually made. That's the good news. The bad news was that the financial reports did not necessarily reflect the full amount of our expenses. Is that a fair statement?
That is a fair statement, yes.
Okay. And I guess the other question that I wanted to raise is, first of all, and again, I'm not looking to shoot the messenger. I very much appreciate the fact that you discovered these errors prior to the audit. Should we as a committee and more largely as a commission have any other concerns about the accuracy of the financial reports that we've been looking at?
It's a fair question, and you state you don't want to shoot the messenger. I've punched myself a few times over this. I'm really disappointed that I didn't notice that there was an issue earlier. I often wonder if it's because when I built the monthly reports, I included 1920 for comparative data, not knowing that the comparative data in 1920 was also flawed. And so I'm the last one that wants to make excuses. I think I should have caught this earlier if I had been looking a little bit closer. I should have noticed that balance in that B of A account was rising more than what I would expect. So I apologize for that. I do take partial responsibility for this. I should have noticed it earlier. So that being said, as far as any other items, it's, we have that annual audit as the assurance that we're capturing everything that we're supposed to. There's always a danger of coding issues. You never know if we're reporting what has actually been posted to the accounting system. We don't know what we don't know is that famous term. People could be hiding invoices in a desk drawer somewhere and not making those payments. There's no way for us to know that. So there's a certain level of we're sure that what we're reporting is what's actually in the system. We don't know 100% for sure though that everything has been input correctly into the system. And that's part of the challenge of what we do is to look closely at areas that looks like might be of concern and do the digging. And sometimes you end up uncovering things such as this that start off innocently enough as a review of the labor allocation process.
Okay, well, I was very glad to hear at the commission meeting that Kellen felt that they could complete the two audits by the end of the calendar year, and certainly want us collectively and the accounting staff for the library to do everything we can to facilitate that process. I'll feel a lot better when we have final audited financial statements for the past 2 fiscal years. Any other comments on this before we turn the page? Okay, we're going to move on to the financial statements. And as we have, I'm going to go through these one at a time. I think in light of the discussion we've just had, there are a few questions, and I'm not sure if these will be for Ann and Erica or for Randy and your group, but I'm going to start with the voucher payments over $50,000. I noticed that we in July and in August, we did make a payment to the P&A group for retiree insurance premiums, about $51,000. And I went back and looked at previous reports of voucher payments over $50,000 and saw that in the month of June, we made a similar payment for July. In the month of May, we made a similar payment for June. And in the month of April, we made a similar payment for May. But before that, there were no payments. Is this an expense that we pay every month? Do we only pay certain months of the year? when should we expect to see this roughly $50,000 payment for retiree insurance premiums?
I do not have an answer for that. Suzanne, is that something that you are aware of?
I don't know, and I can't ask Bianca because she's not here today, but I can find out and I can report back to you. I just don't have the answer for this.
Okay, I'm going to ask the staff to please look into this and see. I'm going to put this under the broader topic of our pension and OPEB and other, deferred liabilities. I think we want to have a clear understanding of this. Okay.
Yes, I will definitely go back and look at the invoices and get some information for you. Would you like me to bring it to the next finance committee meeting?
Yeah, if you could share it before then, that would be great. Otherwise, yes.
Okay, thank you.
Yeah, thanks very much. Any other questions on the voucher payments over 50K? Okay, I see none. I'm going to turn to the cash balance summary. Randy, are these among the figures that are not yet fully corrected?
That's correct. These only reflect the adjustments that we're able to post in August. So it does not reflect the full amount of the adjustments.
Okay. If it's okay with everyone, then I'm not going to spend more time on it. We'll see a corrected cash balance summary next month, right?
Yeah.
Okay. Is that all right with everyone?
Yes.
Okay. Now, I did have a question, and Randy, I apologize for not having asked this question sooner, but on the next report, the statement of special fund activity, we've got two reports, one for property tax and one for sales tax. I understand all of the actual columns. My question is about the estimated column. What is the basis for the estimate? Can you just explain that to us, please?
Currently, the estimate should reflect what was actually approved for the 21-22 budget.
Okay.
Total revenues and expenses.
So it's based on the assumptions that went into the budget. Now, again, I'm assuming that these are fund balances that are not fully corrected, but that will be next month. Is that right?
That's correct. Yes.
Okay. I have no other questions on these. Does anybody else?
I do.
Yeah.
If we're correcting the actuals and the last column is essentially a budget figure, will that stay the same, or do we have to address our budget to change that?
I think it'd be a matter of analyzing where we sit after we've taken a look at what the adjusted numbers are to decide if we need to adjust the 21-22 budget as well.
Thank you.
Okay. So then we're going to take a look at the summary. This is actually the next page, please, Jen. Yeah, here we are. Thank you. Now I only had one question on this, and this is in the expenditure area for other contract services. And I think this is probably a question for you. We're we're 2 months into the year and we're at 29% of our budget figure for other contract services. Can you give us some insight into what's accounted for that, and if in fact these are all expenses that we expected to be front loaded during this fiscal year?
Yeah, these are things that are generally front loaded, and this one should include, for example, the facilities planning work that we're doing, the ADA analysis, that sort of.
Okay, that's, I thought that was the case, but I wanted to be sure. Also, Randy, I'm looking at the bottom. I see the adjustments to cash. The sales tax receipts, those are the actual cash that we received for the months of May and June. Is that correct?
Yes, that is correct.
Okay.
And to follow up on that, we also posted an adjustment in addition to the payroll corrections to true up the receivable that we posted at the end of the fiscal year. The amounts actually came in a few $100,000 higher than what we had estimated. We booked that receivable in June based upon the average receipt the previous 3 months. And as you can see, May was a really good month.
Yeah.
And so it pushed overestimated. So that part is good news. We received more than we had booked. But we also posted an adjustment to true up the receivable and the revenue in 2021. So you will also see that adjusted in the September reports.
Okay, that's great. That's great. Thanks. Any other questions on this? Okay, we're going to turn to the property tax. I had a couple of questions here. And again, I want to, Randy, my question again is related to the estimated column, which I see looks similar to, but doesn't seem exactly the same as the budget number. What would account for differences in the estimated fiscal year 21-22 number between that and the adjusted budget number?
Question. Generally, when we put these together, we include all the numbers that you see in the months that have not happened are the prior year actuals. And so our estimated amount in that column is for the entire year. So what you're seeing, the reason why there's a difference is if there was a different amount recorded in July and or August this year as compared to previous year, you'll see that number start to change a little bit. It's all a timing difference.
So if I were to add across, would I see that the estimated fiscal year 21-22 number is equal to the actual July and August 2021 numbers plus September 20 through June of 21?
Yes.
Okay, that makes sense. I think that's a good way to do it. Does anybody have a question on this first page? Okay, hearing none, I'm going to move over to the next page. I have just a couple of questions, I think, for you, Ann. First is on 51301, publications and legal notices. It's not a large budget number. It's only $65,000, but our actual expenses in August were $35,000, and year to date we're at 57% of the budget. What can you share with us about why we're seeing so many expenses early in the year for this?
Well, this is property tax. We also have an amount in sales tax for that service. So what you're seeing is a lot of the things that we do. Publications would be things that we do for marketing and for communications, as well as publications that the HR department has to post
Um,
for positions.
Got it. You're absolutely right. Thanks for reminding me. So I'm looking over on the sales tax figure. And in addition to the 65,000 we have budgeted for property tax, we have 70,000 budgeted for sales tax, and nothing has been charged against that yet. So the amount seems larger relative to the annual budget than it actually is.
That's
Okay.
correct.
I'm fine with that. I'm assuming that the same thing is true for 52,115 books, media, and subscriptions. That's been charged up to this point against the sales tax. Hasn't yet been charged against it's been charged up to this point against the property tax, hasn't been charged against the sales tax yet.
That's correct. Randy and I talked about that today. We're looking at a quarterly adjustment for things of that sort.
Okay, that's great. Thanks for pointing that out. Randy, the only other question I have, I think, is going to be for you, and it's on the next page of the property tax report. Yeah. In the line item for total capital expenditures, I'm seeing the estimated number as a minus. And I see that the number for June was a minus number. Having a little trouble understanding what happened there. Can you help clarify that, please?
That certainly should not be there. The minus, we should have taken that out. All that is related to the reclassification of Roseland related capital expenses that we moved over into the sales tax fund at the end of last fiscal year. And again, because we do this, we all put all the prior year actuals, that slipped by me. I did not notice that. So my apologies, that will be out of next month's report.
Okay. Okay, that's
mentioned
great.
I'm sorry. A negative amount in June. I'm not seeing that one. Where's?
Well, again, that same line item, it's it looks like, yeah. The 437, 523.
Okay. All right. Yeah, we will take care of that in the September report. Apologies.
Okay. No worries. Anybody else have questions on this item? Okay, and then over on the sales tax, just again, a few questions for you, Ann, and it could be the apportionment between sales tax and property tax, but I noticed that the extra help, item 50702, we're already year to date above the budget. But the budget for sales tax is much smaller than the budget for property tax. The property tax figure for 50702 seems to be running about what we would expect, year to date 13%. Here we had 30,000 allocated for the year for sales tax, and we're already at 42,000. Is this just a question of allocating it properly between property and sales tax, or are we running ahead in terms of the amount of extra help we're using?
It's a question of reallocating. And again, these are things that Randy and I had a really good conversation about how we do the Measure Y allocations. And we're going to share some information with you about that later on this agenda.
Okay. I don't have any other questions then. Anybody have other questions relating to the financial reports? Okay, seeing none, I'm going to move to the other items, which I think are all going to go more quickly than what we've discussed so far. So I appreciate your patience today. Okay, item 5.3. is EFS training for division managers. We had asked that this be completed or at least scheduled by this month. Randy and Erica, do you have an update for us on how that's going?
Yeah, we had the training last week, and I think everybody found it very useful. I know I did. One of the things that we also recorded it, so we can review it if we need to. One of the things that I brought up, and Randy, I would like to be able to do branch reports, like look to see, if I can do an estimate on specific branches and what we're spending. But some of the division heads pointed out that, when we purchase things like computers, we don't do a purchase order for each individual branch. We'll do a purchase order for, say, 100 computers, and then some of those will go to those branches. So right now we don't have the capability of doing that kind of report, but we're looking into it. We're also looking into the TCA codes and how we can maybe revise that system so that we can get kind of more granular information.
Okay. Is it your view that the division managers can now use the access and use the reports that Randy and his team have made available?
Yeah, and they already have. They love it. They like having this information available to them.
Okay, that's great. If it's okay with the committee, I'm going to consider this item resolved and ask Jen to remove it from future agendas. Any objections? Okay, thank you both. All right, item 5.4 was the website update, and this was an item, Barbara, that you had raised. You wanted to be sure that it would be easy for citizens to find financial reports on the Sonoma County Library website. Anne, could you give us a quick update on this, please?
Sure. So at this point, we have added all of the budgets to the website under financial documents. And we have up to the most current audit posted. That would be the 18-19 audit. We are currently, Edie is working on a complete redesign of the website, and that's going to be coming along very soon. Our goal is to make all of the information easier and more intuitive for everyone to access. But for now, you can find all of our financial information pretty straightforward by going to About Us and then looking for financial reports.
Okay, I'm so glad to hear that. Could we, when the website is completely redone, I'm hoping, assuming that you'll do a report on that to the full commission?
Of course, yes.
Okay, so Barbara, if it's okay with you, I'm going to consider this item resolved for this committee. Are you okay? Great. Thank you very much, Ann. Okay, item 5.5, Ann, this is what you referred to a moment ago, a discussion you and Randy were having about the Measure Y allocation process and the documentation of procedures. Can the two of you please give us an update on that discussion?
Of course. So we're talking about the language of Measure Y and how it is used to allocate our expenses. And there are certain things that are specifically called out, like facilities upgrades or increasing hours of programming for children, collections, those things that are easy to allocate to Measure Y. There are other things that we do that contribute to the entire library experience for our communities that are not necessarily called out. But so Randy and I talked about how in other organizations that have different revenue streams, they have ways of distributing it by a formula. And we thought that would be the best way to do this, to make sure that we are being consistent in our approach and that we honor the language of Measure Y, which says that we will use this fund to supplement but not to supplant library funding. So we've talked about doing more of a split based on the proportion of our revenues, like 67% property tax to 33% sales tax. And Randy, can you go into some more specificity about how we are planning to implement that?
Before you do that, Randy, I'm hearing a lot of background noise. I'm not sure where that's coming from, but if you're not speaking, put yourself on mute, that would be helpful. Randy, why don't you go ahead? Thanks.
Okay, so to reiterate what Ann was speaking about, there are two types of expenses. You have your direct expenses that you can apply to a known beneficiary. If it's, if like, for example, capital projects, when it benefits or should be funded by Measure Y. The other type of expenses are indirect. Those are the ones that Ann mentioned that benefit the library as a whole. And those are the ones that we're most concerned about allocating correctly. And I should mention we're looking at applying that 67-33% split that we decided upon for the collections allocation for books and media subscriptions, to apply that to all of the other quote unquote indirect categories of expenses. And so what we're going to be doing is mocking up a revised budget by division, by fund, from the 21-22 adopted budget to show what that's going to look like, how much that's going to impact both property tax and sales tax once we kind of shuffle everything around budgetarily.
Okay, I guess I have two questions. First, for the committee, does anyone have any concerns or objections about the process that Randy and Ann are describing, the distinction between direct and indirect expenses? Barbara?
Well, as you know, I've been concerned about this for quite a while. In a general sense, I like the idea, the Measure Y increased our overall budget by about a third. And I think we all are recognizing that. And my concern has been, again, a written methodology of how we do this. I think this is a good start. I need to kind of think about it some more, because certainly that concern is about, supplementing and not supplanting. And that's when I always bring up the issue of like, janitorial expenses and all that stuff. So in concept, I really like it, but again, I'm, brain challenged today after my exhausting day of getting back here. But I also think that I'm not sure, but I think we need to think about at what point we would run this kind of concept past the Measure Y committee, not necessarily for approval, but for their understanding of it. I know they have probably concerns about it too. And so anyway, I think it's a good start. I feel like it needs to be a little fleshed out a little bit more, and I need to think about it a little bit more. So I wouldn't want to, take a vote on it today.
I wasn't looking to take a vote. I think my question to you and other members of the committee is, do you feel comfortable enough conceptually with this that we should ask Ann and Randy to put together a draft of laying out the rationale and approach, which we can then share with the full commission and with the Measure Y committee? Or do you have large picture concerns and do not feel comfortable asking them to go to that step?
Well, just finishing up, I would like to see it first. I would like to have it fleshed out and stated and written down and brought back, and let us take a look at it first. That'd be my preference before it goes to the Measure Y committee or the full commission.
Yeah, no, I'm fine with that. But you're okay with saying sounds reasonable enough. Let's put something down on paper and see how we feel about it as a committee.
I think I do.
Okay. Jen, I'm going to ask you to put that as a follow-up item for Ann and Randy to please do an initial draft of this, basically just outlining the rationale that you have, the difference between direct and indirect expenses and how you would go about doing this. Let's take a look at it here, and if we feel comfortable with it, then we'll go ahead. Tom, question, concern?
I don't think I understand it well enough with what was been said so far. I could see some permutations and ins and outs. So I think some kind of preliminary document needs to be created that lays this out in some way. And I'm not saying it has to be the whole ball of wax, but something that explains it better for those who are not financially agile to understand it, because it's got to be explained to the public too.
I agree. So can we consider this an initial draft that we'll take a look at? And
A rough sketch is fine with me.
yeah. Ann, are you okay with taking that on with Randy?
Certainly.
Okay,
Good
really
start.
appreciate it. Yeah. I'm sorry, Deborah?
It's a very good start.
Yes, I agree. Okay. All right. I'm going to move on to item 5.6. We talked last month about the fact that the commission is going to have to reauthorize funds for ongoing capital projects. Ann and Randy, have you had any discussions about this? And what can you share with us about what we need to do to make sure that you can continue to move forward with the capital projects that are underway?
Randy, do you want to take this one?
Sure, I'd be happy to jump in. So for the 2021 budget, the final capital projects budget as adjusted was $5,512,000. The actual amount spent during 2021 was just under 2.4 million. So we had $3.1 million budgeted that did not actually get spent. So we pinged both Mike Daw and Dave Tikova to take a look at the ongoing capital projects to find out how much more or how much needed to be reauthorized to complete those projects in 21-22. And so based upon their input, of that 3.1 million, we are going to propose that we move over just over 2.5 million, $2,563,000 to be reauthorized by the commission to be added to the 21-22 budget. In addition, there were some additional projects or additional costs that were not included in the 21-22 budget, nor were they part of the 2021 budget that have been requested. This includes an additional $200,000 for the facilities assessment plan, an additional $875,000 for the Petaluma refresh project. I should add on to that is to be funded by the bequests fund. So that's actually a fund balance neutral transaction, which is really, really good to know. Also, there's the phase 4 of the headquarters refresh project, for an additional $65,000 was requested for that. So total new capital project expenses are requested are $1.14 million. And then finally, there was some additional request for landscaping, an additional $220,000, and exterior painting. And I wouldn't consider either of those capital projects. Those more maintenance type of projects. So that adds another $400,000. So in total, what we're looking to add to the 21-22 budget is $4,103,000. The breakout between whether or not that's paid for sales tax or property tax, 3.7 million of that is sales tax, and only 300,000 is property tax. And when I say 3.7 million for sales tax, we have to offset the $875,000 from the bequest fund. So it's actually a much less of an ask of the sales tax fund balance.
What's the timing on this? When does the commission need to approve this in order to keep things moving along?
I would say by the next commission meeting.
So I think what we're going to need to see then is kind of a written statement of what Randy just outlined. Will you have that for the full commission for the October meeting?
Yes, we can do that.
Okay, that's great. Appreciate the two of you getting together on that. And we'll be able to take this item off of our agenda for next month, Jen. So thank you. Okay, moving on to item 5.7. This was a request to revise or clarify the fund balance policy. And again, Barbara, thank you for bringing this to our attention. Anne, can you just walk us quickly through the very small change that you're requesting here on page 19 of our packet?
This is the only change that's being requested, and it is just to specify that rather than the stabilization fund being 15% of our annual operating expenditures, that it would be a minimum of 15%, and it is the total annual operating expenditures, which includes both property tax and sales tax. The previous version only spoke to property tax.
So this is, thank you very much, Barbara. This seems to me to be in line with the request that you made. Do you feel comfortable with this as revised?
Yes, I think so. I just unfortunately didn't have a lot of time to think about it, but it hits on the main problem, which is our policy was just out of date because it was written before we're dealing with sales tax. The thing is, it is a small change, but it's a significant, it's a small wording change, but it's really significant in terms of the amount that we're putting aside in our fund balance. So, you know, matters a lot. And Randy gave us those updated numbers earlier. So I think that I'm fine with it. Again, I just kind of read it for the first time this afternoon. So, but it was getting at exactly the point that I was making earlier. So thank you.
Okay. Anne, thanks for making this change. Deborah, I'm going to suggest that we bring this to the full commission for discussion and approval in October. You agree? Okay. Thank you. Item 5.8, something near and dear to my heart, update on CFO search. Anne, I know you shared information in your weekly update to the commission and staff, but if you would please bring the committee up to date on where we are. Certainly.
So we had our second round of interviews last Friday. These were in-person interviews. We had 2 candidates, both of them very, very well qualified. One of the things that we asked them to do was give a presentation, and they both did quite well with that. We had a good discussion after the process and settled on our preferred candidate, and then CPS Consulting, who's handling the search, is in their hands now. They were going to do the reference checks actually on both candidates in case we need to call back. And then they would do an offer to the preferred candidate. And that's where it is right now. I expect to hear something this week.
That was my question, that they should be able to complete the reference checks and make an offer this week.
Yes, I believe so.
Well, that would be great. I don't think we have anything else to say here other than let's hope this goes well. Yeah, I agree with your sentiment, Deborah. And then the final item, as you know from previous meetings, I feel that something that this committee and the commission as a whole needs to take a closer look at this year is the library's deferred liabilities, our pension and OPEB. I know that Anne has had some discussions with Bartell Associates, but I feel that prior to anything we get from them, we need to do some educating of the full commission. Dave, I see you have a hand up. I'm sorry. Did I pass over something you wanted to?
No,
ask
I want to
about?
comment. I want to comment on this item after you're done presenting it.
Oh, okay. So my question is just what you feel the best timing and approach is for this. Should this be part of a commissioner education session? Should this be part of a commission meeting? Should we make this an in-depth discussion for finance committee? Dave, I'll turn to you first since you have your hand up.
Yeah, on timing, I think doing anything on this should wait till early next year, because we really don't have any solid ideas about our own financial situation. As Randy says, we don't know what we don't know. So that's my point is I think this should all be shelved until next year early.
I hear that. Any other thoughts on this, Tom?
I would, kind of my attitude about this whole thing about the OPEB and the pension is we need to keep hitting ourselves again and again and again until it sinks in and we understand it. Because it's not something that's obvious or we expect necessarily. And so I think we need to have more study by professionals to give us an idea of what the deficiencies are and get some reports. And I would not want to put off starting that until January or February. I think we need to move on it so that by January or February, we're ready to really discuss it seriously. I'm not sure exactly how we would take it, but I've been through this 2 or 3 times and I'm starting to understand it.
Yeah, no, I appreciate what you're saying. And I think, Dave, I think there's 2 different issues. One is kind of where we are specifically, and the other is we have a number of new members of the commission who have not looked at this topic at all. And I know this is, I'm not trying to surprise you here, but have we actually reached an agreement with Bartel or with another firm, or where are we in those discussions?
Suzanne and I spoke with them today. They are working on the actuarials and they will get us a fee schedule if we want to go with them for the other information.
Oh, okay. So they are in the process of doing some analysis for us now.
Yes.
Did they give you an indication of when they would have something on the actuarials?
On the actuarials, they help me remember this, Suzanne, was this part the 2 to 4 weeks? They quoted a couple of different numbers.
Sorry, I'm having problems showing my face. We are in the process. We need to get them the GASB 68 valuation report from CalPERS. And so I'm going to be putting the request in, and we'll need to pay for that for fiscal year end of 20. It's a year behind. So 2020 will be the one that we're able to get. And then once we are able to get that, then they'll be able to put an actuarial schedule for us, and then we can provide that for the audit. So it'll just take a little bit of time. And so that's the plan.
Yeah, so what it sounds like to me is that until we have the audited financial statements and as I understand what Dave's saying about, we're probably not going to be able to look specifically at this until early next year. But in terms of educating the commission as a whole, Deborah, do you have a feeling about when and how you'd like to do this?
I think that we have to have a board training fairly quickly, certainly by the end of the year. And I'm not sure whether Commissioner Foxton is going to be replaced. It's sort of hard to say. It would be nice if it was a full brand new commission to move forward, but it may not be that way. So that said, I think that this certainly an introduction to this subject needs to be in the board training. I think that we then have to have a more in-depth conversation after the first of the year when we actually do have the numbers and that sort of thing. And perhaps that doesn't have to be the full commission, but as Tom says, it takes a while to really understand this. And I would like the full commission to understand how critically important this is. Barbara has been Commissioner McKenzie has been talking about this for years, and we are listening, but we need to make sure that that as changes happen in the commission, that the whole commission knows how important this is, and that we need to be paying attention to it at all times.
Yeah, I agree with that. Barbara, you have been a driving force here. What's your view?
Well, education is very important. I think that's, number one. I think we can do that, preliminarily, as Deborah said, with part of general board training. It's a critical piece of board training, and we haven't ever quite clarified it to everybody, well enough. I want to get a little clarification about Bartel here, though. My understanding in the past, and Tom might know, I think one of the only other folks who'd been around back then, there was every 2 year, I thought required every 2 year to get, the personal information to an actuary, and it was for OPEB. That's what I thought it was for. The Bartel folks, we hired specifically to take a hard look at our PERS. And so I'm just wondering about this conversation with Bartel, what exactly they're going to do for us, because I know that there was another actuary involved and on the PERS side. Tom, do you remember that? Because I remember one of the union reps coming down and talking to the commission going, you have to get a report every 2 years. This is really important, is, keep up to date information on the OPEB. And then the PERS was something entirely separate. The finance committee meeting through finance committee, especially me, since I kept hearing about all this from the city standpoint, the great concern over PERS mounting, debt or responsibility or liability, whatever the right word is. But we hired Bartel, and Bartel had been used as a consultant by at least one other city. Maybe it was Hillsburg, I think it was. So anyway, I think these are two different things. And that's why I'm wondering what today's conversation was actually for.
So Ann and Suzanne, was your discussion with Bartel specific to OPEB or to PERS?
Go ahead, Suzanne.
So thank you, Commissioner. So we do have one report from the other gentleman that you think you're referring to from North Bay Pensions, and we did communicate with him. And so he provided us one other report, but is no longer interested. And we believe that that report is current, and that's a discussion that I think Ann and Randy will continue to engage in. But we believe that report will be sufficient for at this time. And then I think that's the GASB 75 report. And so that will suffice for this final audit. And then the pension report is the one that we need to have done. So that's the GASB 68 report. And then that's the one that I will need to get. And then they'll be able to provide those actuarial numbers, which is the one that we need to still get caught up on.
Well, both of them are actuarial.
Well, I mean, yeah, but this is evaluation for the pension.
Okay, so the PERS report is what you're talking to Bartel about. The North Bay Pensions guy, why do you think his report is adequate? Because I'm sure it's been more than 2 years. What is it adequate for?
They believe that they can provide the information based on what they said. That is where they can get the numbers. And it's a little bit more complicated than I think I'm able to articulate in this meeting, but through a conversation with Randy and Ann, and they may have to talk to Bartel, but they are still able to obtain OPEB numbers through their skill set, but they can attest to the numbers, but it's a little bit more complicated than I'm able to explain because I'm not a CFO, but I understood what they were telling me.
Okay, I'm going to stop this because I think
Yes.
we're talking about 3 different things here.
We are, but yeah, again, I'm not a CFO, so I'm going to stop.
One issue is information that's required in order for the audits to be completed.
Right.
And it sounds like that's what you're talking about, and that's great. A second area is general education for the commission. And Deborah, I'm hearing you say you would like that to happen in the fall. I'm going to take that offline with you as far as the timing and focus. A third area is a further analysis by Bartel or another firm based on the latest audited information and recommendations about how we're going to deal with the unfunded liability. And I think that goes to Dave's point about something we won't be able to look at until next year, but I think we're going to need to do that as a commission. I see you nodding, Deborah. Do you agree?
Yes, absolutely.
Okay, so Suzanne and Ann, I'm going to ask that you please do follow up to make sure that the audit team has everything that they need in order to, complete their work. I'll follow up offline with Deborah as far as the timing and focus of commissioner training. And I'm going to suggest that we do revisit later in the fall a specific consulting engagement to look at how we would deal with the unfunded liability. And hear any objections to that?
I'm not objecting, Andy, I think, but I still don't think that there's clarification on the difference between the OPEB liability and the CalPERS liability in terms of who is doing these actuary analysis of them. It takes all this very specific information from our HR department. And especially now we have, so many new employees. I mean, there's a whole lot of different stuff that's happened since North Bay Pensions did the last actuary report. And yes, they may have an older one that'll satisfy for the, the pension, for the audit, but we need one going forward. And if Anne is talking to Bartel, I don't know that they do OPEB, they might, but just to make sure that somebody is doing actual analysis of both these different things, because they're done differently. The OPEB was one thing and CalPERS is another, and Bartel in the past did CalPERS, but not OPEB.
Okay. What I'm hearing is that you would like Anne and Suzanne to be sure that they are obtaining the necessary actuarial information for both of the upcoming audits, regardless of whether it's coming from Bartel or North Bay or somebody else. Is that right?
No, that's the actuarial information that has to go to a consultant who then, as I understand it, calculates the liability and puts it in the audit. So what I understood Suzanne to say is the North Bay people did it a while back, and it's going to match up well enough with the next audit that's being done, because that audit is also behind. So that'll match up well enough, but we need a current one. We need to have a current actuarial study done of both OPEB and CalPERS. And then my understanding in the past, when we hired Bartel, it was only for CalPERS. And so who's going to do the OPEB actuary report?
Right. I'm saying we need both. Okay.
Yep. Thank you.
Anne, I see you nodding, or you're on that. Okay.
We'll get taken care of.
Okay. Thank you. Anything that you would like to add as a topic for next month?
Yeah,
Yes, I have a topic.
Yeah, Dave.
Documentation of accounting procedures. When the committee began to encounter a bit of heavy weather about a year ago, I asked Jane Clickman, please find what you can on how the accounting system works. She said there was nothing. And it's standard for an organization of this size to have a formal accounting manual. And in regard to the stuff we discussed today, it's the same song. Third or fourth verse is that we just don't have anything indicating how our people are supposed to do the budget, the checkbook reconciliation. So I think we should talk about this.
Okay.
I'll chime in and say, certainly that's a staff responsibility. And do you feel confident talking about that next time? You don't have to present it, but if we have a new CFO, he or she probably has strong opinions about that. So,
Right.
so we may not,
Great.
David, we may not have your answer next month, but I think that's a top of everybody's list that's sitting on this call.
I think we would charge the new CFO with doing that as one of their earliest responsibilities.
Right.
Other topics for next month, Barbara?
Yeah, I have two things we've talked about before. And I think, again, if it doesn't have to happen next month, but I'd like it put on the agenda as we're carrying these things forward. I like doing that, Andy. One of is our purchasing policy, which we've talked about a long time ago. I don't think it's been written down and documented. I know there was some concern about, I may be wrong, maybe it's been finished, but maybe an update on purchasing policy. And then in the detail, not just like, the director's ability to spend money, but it was more complicated than that, having to do with, I can't remember all the details. Anyway, my other note was about capital accounts. We've talked about that before, putting aside money to replace, a truck, if a truck has a 10-year life, having a policy so we can put aside 1/10 of the money each year. We've talked about them. I think it's in our fund balance policy, one of our policies, but as far as I know, we've never actually created them and we're not actually putting money in them. So examples would be, vehicles and computers, and I'm not sure what all, Anna would know more than I. So I'd like to either, address it or discuss it or have a report on it next time. Thank you.
Okay, thank you. Anything else?
I would say a CFO might have comments about that as well. So while it's,
Yes.
we won't have a full conversation until we have a CFO on board. Yeah.
Just to get it on the agenda, so we just
Yeah.
don't. Yeah.
Right. Okay. It's 4:25. I'm going to call us adjourned. Thank you all. Appreciate you going through some heavy material here. And Erica, library staff, thank you for continuing to work through these issues. And Randy, thank you and your team for your continued assistance. Hope everybody has a great rest of the week, and I hope we can bring a new CFO on board very quickly.
Me too. Thank you, Andy. Thanks, everybody.
Thank you. Bye-bye.
Thanks.